Hello, everyone. I want to talk about a popular trading strategy specifically for Forex called supply and demand. The reason why I want to talk about this is because I've noticed the market has been a bit choppy lately. And with that said, I'm sure a lot of people are struggling with catching a clean trade. So, what exactly is supply and demand? Supply and demand is what causes the fluctuation within the market, the rhythm, the pulse. Basically, when buying power is higher than the selling power, price will increase. And when selling power is higher than the buying power, price will decrease, causing an imbalance within the trend. And I'll touch base on what an imbalance is a little later. So here's just a quick visual of what I mean by the impulse within the market, the rhythm. As you can see here, previously there was a bull run, and it kind of consolidated shortly, then a bear run. And then up here, there's a little supply zone, and I'll touch base more on that later, how to exactly pinpoint each supply zone. But right now, I want to talk about a couple of key factors that I use before I select my areas, my trading areas. So when it comes to analyzing, the three major things that I look at is technical analysis, that's your visual, fundamental events, that's extremely important, and institutional position. That's another one that's extremely important, and I'll get into each detail of that shortly. So let's get into the technical analysis portion. For those who are not too familiar with supply and demand and how to identify the zones, here I have the pound and USD on the 1 hour chart. If you look over to the left, you can see that we were clearly on a bull run. And at the peak of that bull run, there was a reversal. What caused the reversal was a demand for rates to go lower. So at the peak of the bull run, this would be considered the supply zone. And the reason why it is the supply zone is because you start seeing rejection. And with that rejection is letting you know that there's going to be a reversal within the chart. And you have to figure out why there's a reversal in the chart. So if you look over to the left, you can see that previously in this area, price was very low, as well as in this area. And if you look over to the right, since this already played out, you can see that price matched here as far as creating a low. And here's another lower low, and then another lower low, and another lower low. So how do you pick out the quality areas of supply and demand? Well, first here, as you can see, I'm on the 1 hour chart. So this is going to give you stronger signals of where the market is heading. As I said, it looks like, as far as from right here, what I have on the chart, this is the high of the chart. So we would consider that as the supply, mark that as supply. And if you look over to the left, it repeated itself. So you have to look for the common areas of where lows are at. So this is a common area, so that would be a major low. There's just some clean pips there. And then down here is another major area, and right around here there's another major area. So essentially what happens is once there is a reversal, it causes an imbalance within the chart. And that's where you're going to be able to go in for a trade and catch your take profit, or see how long you're able to hold a trade. If you decide to get in here or in here, you have to be able to determine how long are you willing to hold this trade depending on your trading style. Moving on to fundamental events. Fundamental events includes things like the economic news, business reports, Fed announcements, which is extremely important because it can cause a huge reversal within the market, depending. Also, employment rates, because that's how money is cycled within the economy. So is retail and GDP rates as well. Inflation as well, that would definitely cause a reversal or a spike in the market. And those are just a few things you have to pay attention to aside from a technical analysis, as well as natural disasters. Depending on the pair that you're trading, excuse me, depending on the pair that you're trading, Any natural disasters that happen in that country can actually cause a jump in the market, or either bear or bull, or it can essentially just stay within a consolidation zone, some people call it. But that's another reason why fundamental analysis should be a part of your technical analysis and your trading setup. Institutional positions. Now, a big reason why institutional positions is important is because they influence the momentum of the market, the flow, that up and down movement. Another reason why institutional positions is extremely important is because it can show you a correlation between two different markets. Depending on the pair that you choose to trade, there's always a market that correlates with that. So I know that we're here speaking about Forex and we are in our Forex bubble, but sometimes you have to find out what other market correlates with the pair that you're trading, like the S&P 500, oil, gold. Sometimes you're able to predict the flow or the trend in the market once you figure out what other market correlates with the pair that you're trading. So if you see a spike in oil and you know that Canada currency is based on oil, or they do a lot of importing, exporting with oil, that can kind of give you a clear prediction about where the market will trend to next. But that should just be used as a tool instead of a solid confirmation of where you're going to go, because it's just a maybe. It doesn't always have to pair with each other or work out in that way. So let me give you an example of what I mean here by institutional candles. Right here, if you can see over here to the left, there's a huge red candle, and it went down to the downside pretty quickly. So this right here, as you can see on the left right here, we were on an uptrend, and very quickly, without any type of warning, it just spiked down to a bear trend. It reversed immediately. So this is why these are important. Once you're able to spot these out, you will have to follow the trend here. And as you can see, it continued going down. And that's not a golden rule. Sometimes it will continue in a downward trend or a bear trend, but eventually there's going to be a reversal. And that comes with experience and just knowledge of everything else. And that's why you have to use technical, fundamental, and institutional candle. There's a lot of other factors that you need to consider as well. And I can get into that a little later or in another video. But these are just three main things that can give you a bit more confidence of entering your trade here as well. So, for example, we can see that we are in a clear downtrend. I don't really have anything here on the left-hand side, but we can see that we were on a clear downtrend, and we're definitely going bull. And it looks like it's running right through this area, but possibly it can consolidate again, which some people know it as consolidation, or it can consolidate here and shoot back up, creating another supply zone. But this is also considered an opportunity to trade. And I'll get into that again in a moment, but I'm going to go ahead and move on from there. So getting back to the technical part, since this is more of a clearer chart, this is actually a chart that was taken 2 days ago. So even though the market has been pretty choppy, you can obviously see that there's been some pretty solid moves. You just have to be able to call them out. Here again on the 1 hour, which is a stronger time frame to trade, you can see down here the demand zone is here. And all throughout here, there's a couple of other little demand zones. And remember earlier I mentioned imbalances. So supply and demand in institutional candles will cause an imbalance within the market, because this can be considered an institutional candle, this as well. But this is really what you're looking for right here. It's these two big ones and this one as well. But you have to find a common zone, and these are common zones right here. So this imbalance would be your trade. And that's why you have to be able to identify them. Like I said, it really just depends on your trading style, whether if you are a scalper, swing trader, day trader, just holding for the day, holding for a few hours. This would definitely help you out. So let me give you another example. This is the current. Let's say we came in here and this is, currently what we're viewing on the chart. We can completely see that here we were on, well, you can say a sideways market, some people call it. Then we shot up into an uptrend. So now the supply zone, the new supply zone is here. And the demand is in this area. And if you could put a line here, just put an imaginary line, you see it matched up with this demand area. And that's not always going to happen. You have to use other confirmations of how you're going to enter into that imbalance and choose to take that trade. Again, I'll say it, this area right here can be a little scary for some people. Some people will see this as a choppy market, but like I said, if you stay within the higher time frames within a choppy market, you're able to pinpoint certain zones, and that's what you want to focus on. That's as far as from a technical standpoint. You want to train your eye to focus on zones. Another thing I want to mention is if you were a scalper and you're going down into a lower time frame, this may not be an area for you to trade. I would say someone who's extremely advanced can trade it because there's trading opportunities within all of these areas. If you want, you can consider supply and demand as support and resistance, because this would be a huge area of support and this would be your resistance. So that's what supply and demand is. But what makes it different is that this can be a support and this can be a resistance. This can be an area of resistance and support, another area of resistance and support, or another area of supply and demand. But this is going to get you a cleaner trade, and especially in a market that what we're dealing with today is extremely unpredictable. You kind of want to go in for something that gives you longer runs. And if you look on the higher time frame, you see that opportunity there. You just have to gain the confidence of choosing quality trades. And as you can see, if you was to stay and hold on to here, it would be considered a quality trade. So you just have to use your own discretion and trade to your knowledge, your experience, and what you know. So that's basically what supply and demand is. But I'm going to give you my opinion on it. So my question is technical analysis enough to become a successful supply and demand trader, or trade successfully using the supply and demand strategy? Yes and no. Me personally, I use supply and demand as a trading tool instead of a strategy, how most people like to speak about it. As we all know, in the market, there is no master key to trading or predicting or forecasting the market. The market is going to do what it wants to do at the end of the day, and you have to accept that. But tools like this, having information like this, paying attention to the news and truly understanding how to analyze the chart, which would be your visual, your technical side, and pointing out institutional candles will all help here. But the reason why I say it is technical analysis enough? No, it's not. Because until you understand that this market is just not a bunch of red and green candlesticks going up and down, causing what some people like to say is rejection, consolidation, liquidation, or anything like that, you're not going to understand the reason why. Why did the market cause a turnaround? Okay, so yeah, let's simplify it. There's supply and here's the demand. But why was there supply and demand? They wanted lower rates. So look at it like this. I'll give you this scenario. Clearly here on the left, we were on a bull run. Being that we are speaking about Forex, which is the currency market, which is the cycle of currency within in the economy, that means throughout here there was another supply and demand here, and there was a bull run. there was an excess of currency, a supply of money, and it's become a demand now. So the sellers, the people who are interested in this supply, demanded for a lower rate. So there was a wholesale rate. So that's what caused the reversal here. So until you understand that you are looking at financial data, you're never really going to be able to understand the reason why the market reversed or the market is making the moves that it is. Like I said, here in this area, people are going to call this consolidation, choppy, liquidation, but this is definitely still a tradable area. So going back to what I was saying, if this is the supply and this is the demand and they want price to come here and I'm the supplier and I sell it to you at a wholesale price, that's a huge spike. That's a huge rate difference in price. It's a huge rate difference. So my question here is, within these areas, what exactly is this area? This is interest being collected. There was an investment made and they're going to sell to you, but they're going to collect their interest here. This is interest being collected. And until you understand that, you'll be able to predict the market, forecast the market a little bit more with confidence. So let's move over to this right side here. This is the current area. Price was here, there was a demand. So all this interest here was collected, and it has to cycle through the economy now. It has to cycle through the market. It has to go into the bank. So this is their profit, and they're going to start again. So now there's another demand zone down here, and they're going to stop to collect interest. Now you have to figure out the next demand zone and where they're going to choose to collect interest. So that's why I say supply and demand is not necessarily a trading strategy. It is a tool that you put in your toolbox as another form of confirmation. So until you understand that, until you understand the truth about how the market truly moves, then you'll be able to increase your win rate. I know this was really brief, but if you have any questions or concerns, or if you would like me to touch base on this topic a little bit more or anything else, feel free to comment or ask me any questions. Thank you and happy trading.